And hi, everybody. Welcome to another edition of Your Money Radio. Danny Stewart, Dodd Vandenborder with you, with a lot to talk about this week, stock nerds, market lovers. Look, Tesla has been the greatest wealth transfer from hedge funds to individual investors, I think, in the history of the markets. And that's an interesting, so just hear what I said there. Not a wealth, usually it's a wealth transfer from the middle class to those people, but with Tesla, it's been a transfer of wealth from the, Danny, are you still clicking? We talked about this before the show, and we're going to talk about your shirt too.
I think that's Tom clicking.
Okay, there's a lot to talk about. But the wealth transfer.
Stop clicking.
But the wealth transfer is real.
Free.
Yep. And I want to talk about that because I think Tesla also goes to 2,500. We'll get into that. I begrudgingly want to see what Don's shirt is today. I'm not sure if he's even wearing a special shirt. What you got, Don?
Well, once I finished boot camp, this is what gets issued: the official Kiss Army T-shirt.
You got a membership card with that?
I do, actually. And boot camp is rough. You have to memorize the lyrics to every song on Destroyer and attend 4 concerts. And then
do you have to be able to put on the makeup?
Not necessarily.
Is that really a hard task to memorize the lyrics from every song? Because every song only has 5 lyrics. Beth, I hear you calling.
We don't want them to be difficult. They're trying to maximize the money of the Kiss Army memberships. So
the Kiss Army
admittance is got to be fairly on the simple side. But
I'm surprised they didn't have an album called Capitalist.
Well, Gene's soda company is called Moneybag, so.
Oh, he has a soda company?
Yep.
Like,
he's got a bunch of different companies. I'm telling you, that guy's
like, is he legitimately still selling soda?
Yeah, Moneybag soda.
Like, where do you get that? Do you have to? Is it mail order? Is it like that type of thing?
Well, if you were in the Kiss Army, you'd know that.
Oh, only Kiss Army drinks Kiss soda.
It's top secret, Tim.
Gosh, if they don't sell it at Costco, I don't know about it. That's That's kind of my problem.
You think Gene's going to pay for shelf space at Costco?
No. He's a direct order. Gene is DTC, as they say. Danny, what shirt are you wearing? Because that is. I'm
wearing a nice, colorful shirt.
What is that? What do the letters say? What is that?
Bahamas.
Okay. Because it looks like you went to
a couple years ago.
It looks like you went to a gender reveal party and got confused, and you got pink and blue there.
If Danny stands up again, the little print under the word Bahamas, Don, says Bahamas, not in Texas.
Bahamas, you wish you were Texas.
That's Nassau, Tim. It says Nassau. You just can't read.
Does it say Nassau? Yeah. Oh, wait. I'm sorry, Danny. It's not Nassau. In Texas, it's Nassau. Texas
is the guy who lives in Texas.
Look, man, I just drove a car here. I wasn't born here.
People from Bahamas vacation in Texas.
Oh, that's what his shirt says. Well, here's the thing, Don, about Texas. They have a Paris, Texas. They have a little.
Of course they do.
They do. I'm not making this up. Like, they've got a Palestine, Texas. They've got all these other places that are famous that they just took. By the way, I live near a town called, on every other map in the world, it's Nevada. In Texas, it's Nevada. And
Nevada.
Nevada. And that's where I discovered Cowboy Church.
Everybody keeps griping about Texas, Don, but they keep moving here. Interlopers come over here and then they bitch when they get here.
Yep.
The highway goes both ways, Tim. Highway goes both ways.
Texas and Florida. It's like there's no socialist boat or no capitalist boat. There's no Americans taking the boat to socialist Cuba, right? Just like there's nobody driving from Texas to California. They're all going the other way.
No, I've done that drive from Texas to through Texas.
Yeah, but not to move there.
I moved there. I had to move there in the Marine Corps. I absolutely had to move there. Then when I got out of the Marine Corps, I had no idea how much was. I was like, why is all this money coming out of my check?
Mm-hmm.
I had no idea. When you are in the military, you are sheltered from all those state taxes in California because it's your home of record, wherever your home of record is. And Pennsylvania waived all those taxes and things like that. California, the minute you get out, man, your first paycheck, you're like, I'm giving what to what? And it's like, whoa. You move to Texas, everything costs a third less in Texas. It's
So
amazing.
California is trying to pass a retroactive 10-year law if you leave California, that they can tax you going back up to 10 years, because supposedly you acquired all that wealth while you were living in the great state of California.
Yeah, but so they're hitting you up for a wealth tax first, like
What?
a net worth tax when you leave, and then they track you for 10 years for income tax. I don't know if that'll stand the lawsuits. I don't. That's going to get shot down, I hope.
I want I want all the money back I've ever lost on a stock for the last 10 years. I want that money back retroactively, because eventually this, stocks only go up, Danny, so they can come back. And so then I want all that money back. By the way, I was just looking at me in the screen. I can see stock nerds. I have the view up where I can see Danny and Don just like I'm talking to them, as if I was just talking to you. I look good. Like I am looking at me, Danny. And
humility also at an all-time high, Tim.
Yeah.
It's at a 52-week high this week. It is.
Yeah.
You do look unusually good today, Tim. Did you shower before the show this time?
I always shower before the show, but I got myself a haircut. Like, look at the sides here, Danny. Like, I got myself a haircut this week. Like, I'm 44, and I look about 32.5, I think, maybe 33 and a third.
So you're a value stock. Is that what you're saying?
Oh, there's a lot of value in here. I'll tell you what. I talk to Tanya every day about her.
Well, it's a momentum environment, Tim, unfortunately. So
I talk every day to Tanya about what a value I am.
I got a haircut.
Oh, you did?
So did I. It was haircut week for the Revere fellas.
Holy
yeah,
hell.
I actually went and met a client in the office yesterday. The guy that cuts my hair actually is down by the office, so I booked the
you went and saw
got a haircut. I was like a hippie before that. I was going to get my old bandana out from the 70s and my bell box.
Oh, Tanya was looking at me. She's going, look, I know you're handsome, but your hair is a little rustic. And I thought, well, that is a nice way of telling me that I should go get a haircut. So
That's
then I was
called
like,
the sandwich technique, where she mixes some pats on the back in between the point that they're trying to make.
Tanya manipulates me, and I don't even know it. Like, I just know, like, if I go back like 7 comments earlier, wait a minute, what was she? She got me again. Yeah, she is really good like that.
Wait, was that sarcasm? Yes, Tim, that was sarcasm.
Seriously, I'm the worst with sarcasm. I have to ask if that's sarcasm half the time, which means I'm really bad at sarcasm. Let's do this too. Don had an interesting conversation this week with some folks in the industry. Look, stock nerds and market lovers, this is the show that we don't ask too much of you. We give you all the things that we do in the shop for free. But this is the show that I want you, please, I desperately want you to send to your friends and loved ones, the ones that are getting abused by what I refer to as financial terrorists, the traditional advisor brotherhood, that tells you that indexing is the way to go. Like, you just buy and hold an index, because we're going to lay out for you the problems with it this week. And that's not boring, because there's a ton of opportunity cost being missed by not endeavoring into individual stocks. But what happens often is these financial terrorists, what they do is they tell you that you're not smart enough to figure this out. And we've been, for time immemorial, since I joined Danny in 2014 and Don joined a year later, we've been documenting our process. We don't take down videos, we sure as hell don't edit them. And we tell you our loss, we tell you everything that's going on. And just to be transparent, because we know how awful this industry can be with these people. And so we're going to show you some things this week that are really interesting. Danny, I'm doing it again where I'm actually telling people what's coming up on the show, because I've had some comments, hey, that really helps me. I like to stay tuned in longer if I know what's coming up. I'm going to show you the div screen, the growth screen again, and then I want to show you the stocks under $10 screen. Apparently people like to know where the car is headed, Danny. And
there's that professional media.
Yeah, right. Like, handsome and an esteemed member of professional market media is what I am, right? Boy, I don't know what this note means, Don. I've got the word hypocrisy written down on my, I literally just have the word
Well,
hypocrisy. That
could go in quite a few directions.
Oh man, don't get down on a side note. Don't let
I
Don
got
make a right
analyze.
turn.
I got analyzing. I should write some better notes. Like I'm telling you where the car's going and the big things I want to cover. But I'm like, oh yeah, I should talk. Oh, hedging Tesla. We have, and when I say hedging Tesla, it's hedging any large portfolio. Like I like. Can we talk about that collar, Danny, that we talked about on the phone the
Yeah,
other
we
day?
can talk about the collar. We just can't talk
I
about.
know what I know what the hypocrisy comment was.
Give it to me.
It was the big one of the big asset management companies. The guy went on CNBC and talked about how he was lightening his portfolio by selling Apple and Tesla and buying some other stocks. But the only approach that his clients have, they never take money off the table. They're just pie chart pinheads.
Oh my
So
gosh.
the guy's going to put
Yeah.
everybody in a pie chart, charge them, put out a bunch of media, and then go on the media and talk about how well his own personal portfolio is doing, even though none of his clients are in that portfolio.
How did you remember that? Because I literally didn't remember we were talking about Josh Brown the other day with that hypocrisy because you saw it on Twitter and you're like, this is ridiculous. This isn't even close to what this guy does. How did you remember that? That's amazing. I couldn't remember that.
Just
Talked about it before,
one of
yeah.
the many amazing things that makes me me.
Yeah, I totally didn't remember that. And that's the other thing that sucks about this industry, stock nerds and market lovers. The people that you see on TV, half the time they're not doing anything that they purport to be doing. And you don't know that unless you can ferret out that information. And it's
And most of
And
them-
let's be clear, I don't see these guys on TV because I never watch CNBC. The only time I watch it is after 4 o'clock sometimes when there's a big day for earnings coming on, or if Jay Powell is going to be speaking
that's
occasionally, I'll turn it on. But there are people that call out the hypocrisy on Twitter all the
That's where I
time
see
that
it.
I follow, and that's where I see it.
real quick, Don, I've got new things for you. You know what oh yeah, you know what, I should give them a stock real quick that I really like. It just because people get to the information. Tim, can you just give me the stocks that are going up? Sure. CRM on a 30-minute chart is the most beautiful thing you might see this weekend. Tim, it looks like it's, go ahead.
Keep an eye on CRM. That is following the template for big leaders, massive gap to all-time highs on big volume and then going sideways. The question is, how long is it going to go sideways before it takes off? You might see a pullback, and it also made the day 2 higher high, which is also
Let me clean that chart
something
up.
that you don't see all the time with leading stocks. Often they just consolidate inside that big candle, but CRM already a big stock, but apparently not owned by enough of institutions because, man, they were piling into this on Wednesday on
This
that
is
gap
what
up.
you call panic buying. So when you see this, stock nerds, and like it's a large cap stock, and it makes at least a 2x move, and 2x is actually something we measure in the shop every earnings on stocks that report earnings. This is called panic buying with the day 2 higher high. Just absolutely astounding. Kind of settling into a little bit of a consolidation here, but if you trade and invest the way Don and I do, what you're looking for is a couple things here. Fundamentally sound companies, and people throw that word around, fundamentally sound, all the time. It's just, you have to have measurements for these things. And by the way, none of them have to do with valuation or PE. So if you think you value stocks on fundamentally on the valuation or the price to earnings ratio, I can't begin to tell you how wrong you are. You're always going to be on the wrong side of history because you're going to miss stocks. You're not going to be the person that says, I participated in this stock when it had this monster run up. You're going to be the person oftentimes that lacks consistency because some of your best moves, your biggest moves, happen in stocks that have what you might consider outrageous valuations or outrageous price to earnings ratios. But I cannot begin to tell you enough that that's your opinion, and your opinion doesn't matter to the market. And so if you have a fundamental subset and a technical subset that you're always looking for, and we're 70-30, 70% fundamental, 30% technical, looking for the top 10% fundamentally of that market, there's a way these stocks trade. And this 30-minute pattern right now, an hourly chart on Salesforce, is beautiful. And if you don't have it, By the way, everything we do in this shop is on the show, excuse me, is for your educational purposes only. Never ever be misconstrued as advice. If you want advice, if you need advice, if you seek advice, I'll show you how to do that in a moment. But when you're looking at this pattern, if you didn't have Salesforce, this is where you would add it. But you're going to hear people, it's up too much. Look, you're trading this now for a move into 300. And Don, when you're looking at that 30-minute chart, let's say you took the trade off the 30-minute chart, where would Don Vandenborg take his stop? Where, hey, I'm wrong if the stock does what?
You're wrong if it breaks below the low of the gap up day. That's just my gap rule, and it's going nowhere near the low of the gap up day.
Yeah.
So that you can then use some moving averages that start creeping up if you wanted to really tighten your stop.
Yeah, and that's that tightness. You have to understand, stock nerds, about supply and demand. I try to ferret in supply and demand into my videos at least once or twice a week when I do them. Don does as well. But the only way that pattern trades that tightly is because nobody's selling. The people that matter are not selling. So the moment some shares come on to the market, you know who's scooping them up? People that need them. And who needs them? Institutional investors, because they don't have enough of it. And so it's an amazing thing to see when you see that.
That move really gave a shot in the arm to the whole
oh yeah,
the whole sector.
Yep.
ETFs, IGV, CLOU, and WCLD, all cloud and software related stocks at all-time highs.
1000%. Now, with that out of the way, Don, with that out of the way, I want to show you something. So look at this. Another mystery box. Right? Like, I know, blows your mind. This mystery box, let me tell you what, I don't even know what's in the bigbatbox.com.
Pretty cool box. Got the baseball field on it.
Yeah. You know this is a high quality mystery box because the guy designed his own box, had it printed. It's got stuff on it. What is that? That's PNC Park in Pittsburgh.
That's called marketing, Tim.
That is marketing.
You pay up for it.
Listen, I appreciate good marketing. When you've got an end cap display at a store that I may or may not go to in the era of COVID, I'm going to check that thing out, Danny. I appreciate the effort. Big, bad. People might think I get endorsed, like they're sending me this stuff so I could talk about it. It's not true. I love mystery packs. So there's a bunch of packs in here, and I think there's some autographs. But Don, this will be unwrapped on my Twitter channel, I think on Sunday, which I haven't done in a while, but I'm going to do it.
And the 99.4% of the useless cards, they go where? In the pile with the other?
Yeah, they go in tiny. I call it the tiny don't look at me area. Yeah.
One of these days she's going to look at you, Tim, and there's going to be an issue.
Yeah, she's going to look. And so, well, listen, so I don't know if Rennie is not so much into the sports cards right now. He likes cards. He doesn't know anything. He's 3. But my daughter, she is not into sports cards, but you know what she's into, Don? She is into vinyl records. So we have this thing where we listen to music together on the record player, right? And so we just picked these up at the used record store yesterday. Got the Beatles. She loves the Beatles. So we do the Beatles. And then Don, I don't think there's any album that would constitute what I like that is parenthetically different and opposite from the Kiss Army. But can we just all celebrate Neil Diamond, the jazz singer? Like this was $4.99. Can you believe somebody took this to half price books in Texas? Said, I don't want you, Neil Diamond, the jazz singer. Look at Neil Diamond, the jazz singer. That's
you don't by any chance have any bootleg Kiss live in Stockholm 1985 double albums, do you?
No, not
I might know somebody that has one of those.
Oh, you have it on vinyl? Nice. But
no record player, but I can't part with it.
Maybe Kiss can sing Coming to America, which might be the greatest song Neil Diamond ever released in the history of music. No?
Really? No.
Oh my gosh. On the ships
that's
and on
that's
the plane,
that's not even better than Sweet Caroline.
They're Coming to America? Oh, no. Look, Coming to America, I believe, was in running to be our new national anthem at one point.
Tim, do you have a bunch of Barry Manilow albums too?
I love the Copacabana. Don't you dare trash the Copacabana. Her name was Lola, Danny. She was a showgirl. She had feathers in her hair and a dress cut down to there.
She would merengue and do the cha-cha.
Yes, she did. Yep. Come on, Danny.
And while she tried to be a star, Tony always tended bar across the crowded floor. They worked from 8 till 4.
Yep.
They were young and they had each other. Who could ask for more?
Those aren't Kiss lyrics. How do you know that? Are you a closet Barry Manilow fan?
I'm a closet Copacabana fan.
Because the Kiss Army will come out and get you?
Well, Barry Manilow and Joe Montana had never been seen in the same room together, so there were rumors that they were the same person. But Copacabana is an awesome song. Anytime you can visualize.
He got one.
Copacabana, I'm down with Copacabana.
Oh my gosh, Danny, he got one. He wrote the songs that make the whole world sing. What are you talking about? Jesus, he dated every girl in the world named Mandy. If he would date girls, I don't understand how you say he got one. Yikes, Danny. Yikes.
Have you ever see the Simpsons episode where he was singing? I didn't catch you, Dan.
I said, is that what you were listening to when you were flying helicopters in Iraq, Tim? Mandy?
No, although the guys in the back would hook up their music players to the intercom system.
Yeah, you've seen Apocalypse Now with the helicopters and the loud music coming in. I always picture Tim like that, but listening to his softer music that he likes.
Copacabana, baby. Let's do this. I'm going to get sidetracked in the larger discussion. Boy, I was looking at something. I was watching the Jay Powell speech, Don, the one where he said, because we can't ever generate inflation, we're just going to move the benchmarks, which is an interesting discussion. And someone on the TV was discussing why this is where you'd want to own the oil stocks right before Jay Powell came on. And I can't fathom why anybody would own the oil stocks, which is kind of like the bank stocks, Don. Any thoughts?
Well, they're laggards right now.
Yeah.
We're just going to watch the charts. If they start coming to the fore, that's going to be at the expense of some other group. They really, because they've shrunk to such a big percentage within the S&P 500, any selling from some of the bigger groups that move into them is really going to create big runs for them. But I've got alerts set on the financials and on oil, but they haven't been hit yet.
And it astounds me every year somebody comes out that they like Bank of America. They say the worst phrase in investing, which is you're getting paid to wait, which is a way to say you're taking losses. But well, they talk about it with dividend investing, and it's just not right.
Why don't you say you're getting paid for dead money?
Well, not only are you getting paid,
you're actually doing this.
Yeah, you're getting paid for debt. You're not getting paid. You're losing money, and someone's giving you a reason to not sell your stock. And even though they're continually abusing you by the stock price going down, like it's an abusive relationship.
Well,
but the yield.
So the analyst that's putting that out works for an investment bank that may be trying to support that company.
And that's the other thing too about the investment, the traditional investment brotherhood. When they come on and talk about stocks that they like. One, if they don't own them personally when they put up their disclosures, question it. Two, you have to wonder, are they trying to offload their firm's position onto you, the retail investor, the individual investor? And some of you are going, well, they're not allowed to do that. What do you mean they're not allowed to do that? There's no police that are going to come after them. Well, Tim, the SEC, really? The SEC is going to go, prove. I mean, just peel back the onion and try to prove that they acted maliciously. You guys should all buy ExxonMobil. How many people have come on the media, the TV, the Twitter, and tried to recommend Bank of America or ExxonMobil, just some of the worst stocks, because valuations and stuff like that. Let me show you some dividend stocks that
ExxonMobil has gone from being the largest market cap in the world to being booted out of the Dow 30.
By the way, I'm going to touch on this, Don, and I'm going to forget this phrase in a second, but I want to touch on the Dow rebalancing that happened this week. So as Don was having this discussion with some people on Twitter about indexing, buying and holding, somebody chirped up with just buy the Dow. And as you know, the Dow's 30 price weighted stocks, not cap weighted, but price weighted. And my very first thought was, how shitty of a stock picker are you that you have to pick 30 stocks to find one or two good ones in there? That was my initial thought. And then my second thought was when the same person chirped up that, look at Salesforce got added to the Dow this week. And I thought, I've owned Salesforce in August and I screened for it with what I'm going to show you here in a few minutes, stock nerds. How awful of a, like, how bad are you at your job that you had to get Salesforce, you had to own the Dow. You had to own the index that just broke even this week. And how great is that index where when Apple announced their 4-for-1 split, they were scrambling because heaven forbid one of their other crappy stocks in that price weighted index is not going to be the leader anymore, which Apple was in terms of price. Now they're like, we need to get some other blood in here. So they kicked out, who'd they kick out, Don? They kicked out ExxonMobil,
Raytheon, ExxonMobil,
and Pfizer,
yeah, and added Amgen, CRM, and
Honeywell.
Yeah, Honeywell.
Yeah, and how great is your index when one company announcing a split forces you to do the biggest reorg in 7 years? And by the way, that was a huge reorg after the 2008 implosion. Great index you got running there, boys. Great index.
You know, the Dow just turned positive.
Yeah.
Turned positive, I think yesterday.
And so let's do this real quick.
You just made DJ 100,000 K's head explode if he listens to this podcast, Tim.
I doubt that person listens to anything that I have to say on markets.
Oh, Paul, he's a good guy. He follows us.
Yeah, maybe. I doubt it though. I highly doubt it. And I whether he listens or not, I serve the greater good of the stock nerds and market lovers. Like, no one's going to tell you what we tell you on this show, like the truth, like transparency, like actually.
Okay, but can't you argue that the Dow is serving the greater good by bringing in better, higher priced companies that are, if you're a Dow investor, your price is going to perform better now with these stocks than the ones they're kicking out.
Oh, but I take the other argument with that. Can I take the other side of that?
Okay.
Here's the problem. Charles Dow created the Dow in like 1898 or 1904. It was very, very early, 120. It is like Tim said, it's not market cap weighted. It's not equal weighted. It's price weighted based on the price per share of the individual stock. Therefore, even though it's got a small sample set of only 30 stocks, it's also got huge variance from $80 stocks to $300 stocks. So just a couple higher priced stocks moving skew it. It's a
and the S&P 500, the top 5 stocks in it are 25% of the average now. So you got the same argument for any index.
I can't argue with that either.
I see what you're saying, Don, that they're reorganizing it to make it more competitive with the other indices, which makes it better. But I guess that goes back to my whole discussion on indexing, why there's such a better way to invest. And look, there's a million ways to make money in the markets. There's bond traders. There's some real successful bond traders. There's some real successful value traders, I believe. I don't know any personally, and value has not been anything that you want to be attached with in a very long time. But there's a million ways to make money in the market. You can make money indexing. The question isn't making money. The question I have with indexing and people that want to index and tell you to index is, what's the opportunity cost of keeping you out of Salesforce? They keep you out of Apple. They keep you out of Tesla. They keep you out of, and they tell you, well, you're getting a couple of those stocks in the index, but you're getting a bunch of junk too. And you can use the indexes like we do to fortify an already overall bullish portfolio. But that part of Don and I own different indexes because we want exposure to the junk off the bottom rally when they rotate into that, because we have all leadership stocks. And there comes moments where you rotate into these junk stocks in 2020. But the reason why they're able to get away with talking about indexing and making money, and that's the only thing you should ever do, is because they never ever talk about your lost opportunity. That if you took some of those funds and you actually invested in individual equities, they purport it to be too hard. And I'm going to show you some things here in a little bit, but let me show you how you can find success very quickly. I'm going to show you my screens here. We'll talk about some stocks. Then I think it's really worth your time, stock nerds or market lovers, to see this. Don got into it. Like it wasn't a drag out fight. Don was a gentleman with people who I don't consider, well, let me not cast aspersions. I don't like them. I can just tell you that I don't like them. But let me show you how to get a hold of us. If you take umbrage with, listen, there's two things here. If you go to Daily Market Insight, there's a couple things that you're going to see here. Don is constantly updating this list. Now, I've got the Friday night video, so if you're watching this, you're not going to see a new 21 over 21 list, but I'm going to show you where you can get a fresh 21 over 21 list. It's from this guy right here. But you got to email him. You got to talk to him. You got to ask him, Don, what makes the 21 over 21 so great? And he might just be so nice to send it to you. We do everything for you for free. We give you all our things because we know that when you do need help and your loved ones need help, you'll come to us. And that's what's been happening in 2020 a lot. But if you take umbrage with anything that I'm saying, you don't care for me, that's fine. You can email me directly, but right here, America's Fiduciary, Danny, that's the complaint line right there. As America's Fiduciary, that people can email you directly. So if you're a traditional advisor that doesn't like what I have to say, if you sell annuities, and because I think you're going to hell because you've unleashed that travesty onto people, you complain to Danny about me. If you sell life insurance as an investment in church, which is a real thing that has happened to someone that's in our world, let me tell you something. Not only are you going to hell, but you can call up and complain to Danny. And Danny is a listening ear to your plight. And maybe you don't know that life insurance is an investment, but listen, Danny has been shining a light on these cockroaches, Danny. Like you opened up the rock and all these cockroaches come out, you know, and they scurry. I'm not doing well about casting aspersions, am I?
No, you're doing great. I just like the fact how you kind of glossed over you and went straight to me for the complaints. You can email me if you want, but hey, here's the real guy.
Yeah, look, if you want change, go to the top. Don't come to me. You want to affect positive change. 1, stop selling life insurance as an investment. 2, stop selling annuities. 3, get off your indexing high horse and learn how to pick some individual stocks with buy rules and sell rules.
And if you really don't know how to do it, we'll help you. Come on, come over.
You know what?
We'll show you how to stop selling annuities.
That is a truism. There's actually, like, people might think that I don't have any friends in this industry, and they're right. I don't.
We got about 4.
I got about 4. Well, but
Remy, Reagan,
yeah, Nora,
Tanya,
yeah,
and Nora. 4.
Yeah, 4. About 4. But look, you call us. You got a problem with anything I'm saying, I take responsibility. Here you go. Call us, 855-722-5932. But in all seriousness, I know I'm joking here. Danny is your complaint line, and life insurance is not an investment. And people get told that all the time. And it's the absolute positive, it's illegal, but it's not right. And there's better ways. Like if you own an indexed annuity, there is an extremely, like 99% cheaper way to do what you just paid for in the market with if you use our methodology with just as much quote unquote safety. But listen, anytime you step into a market, you have to have rules to exit. Well, I own an annuity, so I don't have any sell rules. It's like owning a car that you say you never have to maintain. There's a trade-off. If you have a car you never have to maintain, you probably own a bike. No, nothing, no, okay.
We agree.
Yeah, I'm struck. I couldn't really think of anything there, so I just can't. I was hoping Danny would have something, but then I realized.
No, I'm gonna let you just hang out there, Tim.
Well, I appreciate that. So listen, call us 855-722-5932, and then if you're looking to invest in yourself and you want us to do your strategies, we're more than happy to do it. But if you just have questions, don't realize we don't have a sales team. We don't need one. We've doubled the firm this year we doubled the firm with America's fiduciary taking every call. And Danny's been on the phone a ton this year. Thank you, Danny. Have we said thank you for taking every call?
That's why I let you hang out there, Tim. You're everybody call me for complaints and hey.
Oh my gosh, right? Look, somebody's going to call you angry one day and you're going to be able to actually calmly explain to them what I was saying. I'm quite sure that happens now. But that's the truth, Danny. These people, I'm looking down on my screen. Danny is down to my lower right. These people that sell annuities as safe, what people don't realize is that when someone sells you life insurance as an investment, which is illegal again, or an annuity, what they're selling you is in perpetuity a money stream. You're somebody's money stream for the X amount of years, and there's such a better way, and the opportunity it's costing you is immeasurable because, well, what could you have done with those funds? With our methodology, whatever you would be up what Don's up this year, you'd be up what I'm up this year, and what's your annuity doing? And as Danny always tells people, your annuity is not going to perform the way you think it is. And I've never heard Danny talk to a client and say, well, that's surprising. Your annuity outperformed. It's not designed to do that.
Yeah, they're reasonably safe. They just don't make hardly any money.
Yeah, they're designed to protect the insurance company that sold it to you.
Those indexed annuities are designed to pay about 3 to 4% maybe.
Yeah.
No matter if you look, and they'll always show you the illustration at 7 or 8%. Won't happen.
Yep. And so, look, if you have questions about that or someone hoodwinked you, just call us. Danny on the occasion can help you get out of that. 855-732-5932. So let me show you some stocks that may or may not be actionable. So I'm going to run these screens for the first time today. Don, your call. Do you want to do Div Grow 2000 stocks under $10, which I got a little switcheroo to I want to show you, and then or do you want Grow Screen with 300,000 volume? Those are your three choices.
How about all stocks that begin with the letter A? It looks like you had that there.
No, that's just the default. Let me. You know what?
Door number 3, Alex.
I'm not a fan of low price stocks, so I'm not going to go with $10. I'm a fan of growth.
All right,
let's do volume, so let's go with that.
Let's do with growth. So I want to show you something.
That's the pond that I would be fishing in.
Yep. So I want to show you something on FinViz.
There's a big fish in there.
Yep. And so look, a couple things. FinViz is free. I show you things that you can do at home, stock nerds. Like someone asked, well, why do you guys give away all your information? Because there's nothing new in investing. There's just psychology and strategy and execution. And those are 3 things we excel at. And we want to show you how you can be successful. And if you do need help, or the people in your life need help because they can't keep up with it, it's a lot of work, just like anything in life. You just call us, 855-732-5932, and we're always glad to have a discussion with you. So look, this screen, pause the video right here, take a screenshot, print it out, and program it. FinViz is free, folks. I don't sign up for the premium just so I can operate the way you guys operate at home. But look, I want to show you these little mini charts. Amazon, I think, is going to 3,500. It might pause up there. By the way, I own 1, 2, 3 of the stocks in this screen. But I want to show you the commonality between these names: Amazon, Dexcom, EPAM, Now, PayPal, and Take-Two. They're all beautiful looking charts. And the other thing too is it's six stocks deep. I don't get my jollies. That's a good phrase, right, Danny? I don't get my jollies. Do people even still say I don't get my jollies? That seems like an outdated phrase that I just.
That's probably 1950s, Tim, but
1950s.
Yeah.
Do you mean
maybe
like
60s?
Wait a minute, 1950s? Like the Dave Brubeck Jazz Quartet album that I just got at the record store, the Bossa Nova.
Wow.
I love jazz on vinyl. Jazz on vinyl, Danny, is the most beautiful sounding of
Oh,
music.
I agree. I agree.
Yeah, like when you hear the hiss and the pop
I'm
of the
surprised.
music,
The reason I was saying wow is that looks like it still had the plastic on it.
that might be a new issue. I got it at Half Price Books, but that might be a new release, or they saran wrapped it. Who the hell knows? But the point being that if you're going to listen, there's nothing better on a Sunday morning or early Saturday, like think 4:35ish, where you get some coffee going, you get your record player spinning some jazz, and you're just in your world doing your work. Nothing better. Whoa, whoa, whoa! Don looked away. Danny's looking at his crotch. What's going on?
I was actually.
Oh, okay, Don. When you get up early and it's just you,
Stop reading the articles, Don.
I see what you're doing, Don, early in the morning.
Gee, that it's for the articles. That was the Gene Simmons collector's edition Playboy. I'm not listening to jazz in the morning. No, I'm listening to Motorhead, Ace of Spades, Iron Maiden,
sure it's not Ace of Base?
Queensryche.
So anyway, where were we? Oh, it's 6 stock. I don't get my jollies. That's right. I don't get my jollies off of screening. Like, oh, my screen turned up every stock that's tradable on the S&P and the NYSE and the NASDAQ. I don't need that. What I need is a tight list of stocks that I can research and study. And then if I want to look through chart patterns, what I typically do is I look through historic winners of the past, and I match up commonalities, and it leads me in a direction to where I want to be. But I designed a screen that one day I'll have to tell them the story about IBD, but I designed a screen that would replicate the best screens at Investors Business Daily, and this one, Stock Nerds and Market Lovers, does that. And so, like I said, I own 3 of the stocks in there, and it's one of my favorite screens. And I give it to you free of charge. Don, I'm going to do 10 stocks under $10 because I know there's a big market for it. I know our people like it, but look at this, Stock Nerds. Whoa, did I just do stocks under $10 screen? And how did Amazon show up on here and Netflix? This isn't right. Something over stocks under $10.
US price over $1.
Thank you.
Yeah.
I must have switched something. Oh, I know what happened. There we go. So here's stocks under $10, but I want to show you something that I missed on the first iteration of this chart, Don, or this screen. And I don't do stocks under $10 too often, but I want to show you the trick that you want to do, Stock Nerds. Price above the 20 SMA, and what you get is one name. And so AMRN, and you can see breaking out of a little consolidation there. And so again, I don't want a bunch of names. Why are you laughing, Don?
I'd hate that screen.
Fair enough. Fair enough. Let's go to my favorite new screen, the Div Grow 2000. And
so you probably really hate stocks under $2, huh, Don?
Never mind. I'm just gonna.
No, it's okay. Look, I got my start.
That goes against everything that William O'Neill ever taught.
Yeah, but Don, I got my start in penny stocks, like long before I knew there
and
was.
Where are you now? You're not in penny stocks anymore.
I know, but the journey that a penny stock or a low price trader makes it's a journey. And
they all college education, huh?
Yeah, and so look, if I can help them, maybe there's 1 or 2 good stocks. It's not that they don't want to own.
They have no
stocks.
Institutional support. They're pumped. They're manipulatable. Amarin was a $26 stock that went down to $4 because their drug failed. It's just not something I'm just not there. I'm just not with it. I'm just not.
I don't like fish, but some people eat seafood.
You don't like fish?
Oh my God, fish is awful. Can we discuss the fact that the grossest thing in the world, like
they're very healthy for you, Tim.
No, Danny, let's just no, that's called marketing, Danny. Brisket is healthy for you.
Wow.
The worst fish in the world is tuna fish. The fact that the stuff that comes in a can, that they had to label it, we just couldn't call it tuna. We had to put the word fish after it because it doesn't look like anything in a food chain that's
Have
edible.
you ever bought a tuna and cooked a tuna steak fresh?
No, Danny.
Tuna steaks are fantastic. Mahi is fantastic. And
Listen.
I don't think that those cans say tuna fish. I think that's just an old.
Amberjack's good.
They say tuna fish, Don. One company had to call it chicken of the sea because it's so god awful.
And that really confused Jessica Simpson at one point.
Think about it.
God, I'll tell you what, I'll come down to Florida next time when I come down to Florida to see you. We'll go fishing.
I don't like fishing. I like eating fish. Fishing is a waste of time.
That smells as awful as a cat food can. Tuna fish is cat food, and cat food smells awful.
Fish is cat food.
And let me tell you something. When you open up a can of that nonsense and you smell that, nobody goes, "Oh my God, that is so fantastic."
My dogs just start jumping on my
love
leg.
Tuna.
Your dogs also put their nose in poop. Not a resounding endorsement. Hey, this dog that put his nose in poops likes tuna fish. Buy chicken of the sea.
Okay, so your fish is my $10 below $10 stock. I got it. That's how we can summarize that.
1,000%. Yeah.
But I will say at least if people do have to graduate and learn and grow, whatever.
Yep.
And so people that are just starting out only with $500 or $1,000, $2,000, if they're going to dabble in this area, hang on, Don.
Fractional shares are available now, Dan.
You can't buy. You got to buy their bucket of fractional shares.
No, you don't.
No, I don't.
No,
think
you
that's
don't. On
true.
Robinhood, my kid owns a fraction of Tesla.
Oh, you can do fractions of individual stocks.
Yeah. So instead of 1/3, he'll own 2/3.
There goes your only argument, Dan. What else you got?
Wow.
Listen. If you want to do low price stocks, do over 8, less than 20.
I'm sorry, but I can't. Never mind. You say it.
So this div screen, same thing. Copy it, print it out. It produces some interesting names. But the main thing is if you look at the technical patterns within the fundamental flow here, they all have pretty much the same makeup, and they're all paying above 2%, and they're sorted by they should be sorted by yield. Did I not get it sorted by yield? Customs or I don't know why it's not sorted by yield. Technical. I don't know why. Normally I have it sorted by yield, but today it did not want to sort it by yield. But that is a bummer.
Where is the yield? I'm trying to look for the yield. Where's the yield?
It's not on here. You know what? It's a free service. Sometimes I guess it doesn't act right. You can export them down here.
Are you saying you get what you pay for, Tim?
Well, actually, you can pay for this, and I don't pay for it because I like to give things to people that doesn't cost them anything, so they can, I don't have an agreement like I don't have an agreement with the bigbatbox.com. I like mystery boxes, but I show people things I like. BlackRock is here.
I like cheesesteaks, but they're really not good for me.
Oh my gosh, do I love good? I haven't had bread I haven't had a roll or bread since January of 19.
That's crazy.
Oh yeah, no, I haven't had a soda since January. I drink the fizzy water. I love the fizzy water. Here's a little hibiscus LaCroix that I enjoy. I enjoy the clear fizzy water. Yeah. I haven't had. Let's see what else
I heard somebody describe like a strawberry LaCroix as I was drinking water and somebody ate a bunch of strawberries and farted as they walked by me, and that's what it tastes like.
Trying to get that in my head because I will drink the watermelon and strawberry LaCroix after a run. But I don't mind them. Now I have had things that taste like a fart in my mouth. I'm trying to think of the last thing I had like that.
Oh my gosh.
This is what you want to get to flavor your water.
Well, what's it?
That's actually pretty good.
Stevia.
Stevia. Oh, you know what? I gave up. I had stevia like to get the bridge from Diet Cokes, which I really liked, like diet soda in general. To get that bridge from saccharin and all that other nonsense, I did stevia, which they have stevia-based sodas, which are not that bad. And then one day I'm like, you know what? F this stevia stuff. I'm going cold turkey. I'm going no
Stevia
stevia.
sodas are very expensive.
Yeah, they're pricey, but it was a good bridge. It got me. It was about a month worth of drinking like stevia dew and stevia cola. Whenever all the Dr. Stevia, instead of Dr. Pepper. Once I got over that, I was like, okay, this is great. I can just go straight LaCroix. No candy, Danny. I used to love peanut M&Ms, man. I haven't had a peanut M&M in almost 2 years. Right? It's nuts. It's nuts.
Literally.
Don coming up with it. Look at Don. Don's all proud. Fastenal, Conagra. I'd like Fastenal. I like that chart of Fastenal a lot. Speaking
there's
of
a lot. There's a lot
Pepper,
of good. There's a lot of good charts in there. How about next time we run this screen twice and don't run the $10 screen and then run the growth screen?
Now look, I'm going to show Stockner something.
You think it's going to change?
If you take umbrage with Don's abuse of people that like low price stocks, that's the complaint line. Yeah, that Don. If you don't like what Don's doing to low price stocks, that's who you complain to. Right there. What I want you to do is just pick up the phone, press 2 for Don, and start yelling into it.
This segment has been sponsored by Rockstar Energy Drink, Silver Ice flavor, on sale for $1 at Dollar Tree.
That stuff.
I thought you gave those up.
I did. But you know what? Nowhere around here. All the flavored, I allowed myself one diet soda a day. And the only thing you can get around here now is regular Coke, Diet Coke, Dr. Pepper, regular Diet Dr. Pepper. So no more of the flavored Cokes. Like I was hooked on orange vanilla Coke and cherry vanilla Coke. They're fantastic. And they stopped making all of the ancillary flavors because of COVID. It's the weirdest thing I've ever seen. So I had to look for something else. And this is what I came up with.
We should make this more of a food show. Let me do that for you. If you're look there, do you like barbecue, Don?
Love barbecue.
There is a community on Facebook. They're called the North Texas Barbecue Addicts, NTBA. Let me tell you something about this group. Fan-effing-tastic. Like they don't allow any they don't allow any nonsense, like a-holes, like all the stuff that makes Facebook and Twitter like ugly. It's like 62,000 strong. If you like to barbecue, you want techniques, you want to know the equipment to get, like whether you should get a pellet smoker or stick burner, offset smoker or kettle. I'll tell you something. There's such a wealth of knowledge, and there's got to be a million years. Danny, you belong to that group, don't you? Do you belong to NTBA, North Texas Barbecue Addicts?
Yes.
Let me tell you something.
Dan's got his own rub. Of course he does.
Dan's got his own rub should be
It's a great rub, as all of our clients can attest, because they get it for Christmas and then they ask for more.
So Dan rubs our clients for Christmas. I
think
that is
yes, accurate statement.
Folks, we're talking about a dry rub for
I don't think you made. I'm almost certain you didn't make it better there.
And vegetables, and it's a.
I'm pretty sure you're still not making it better with the insertion of the word vegetables into the sentence.
I've actually had 2 clients this week ask for more.
Ask for more of your rubs?
Yes.
So that's why you had to go in the office, huh?
Yeah, yes. Gave some to them too.
Still not getting better.
It's like talking to Michael Scott in an episode of The Office.
Can I be assistant to the general manager?
Can we talk stocks now, or what are we doing?
Yeah, we can do that. But
how about our losers? How about if we talk about our losers?
So Don doesn't have a conniption fit?
Oh, I know what to do now. Insult Kiss and show Don stocks under $10. That's all I'm going to do on the show.
Bad combination.
Anyway, North Texas Barbecue Addicts is better than any show you'll ever watch or any course or video. I'm telling you, great group. Let me show you Audio Codex, which I'm going to sell this today, and this is going to end up being a double-digit loss for me. AUDC. So Audio Codex, you can see it's just trading below every range here. I should have sold it up earlier in the week when it couldn't get back above the 50, and it's kind of drifted lower. And so I like to keep my loss is single digit, but this one's going to end up being double digit if it doesn't have some kind of miraculous recovery before the end of the day here. But
it's double digit. I locked it in earlier.
oh, you did sell it already?
It's down another 1.5% from where.
Oh, okay. Well, it's already taken care of.
It was getting weak. It was getting weaker. So
yeah. So this is not a good pattern in audio codecs, but well, why give it so much room to breathe, Tim? Why not have it on a tighter leash? And good question. You can call me a hypocrite if you want, but what I've been doing with stocks is taking smaller position size and giving them room to breathe in these liquidity breaks. So let me show you what a liquidity break is and what's been happening in this market. And so like here's the NASDAQ, and you can't see on a daily chart this. Look, this is a beautiful daily chart of the NASDAQ, and you can't see. I mean, this is. I'll tell you what. Let me take this down to a 195-minute chart. I'll tell you something. This is a bullish pattern that looks to me that it wants to go higher. This is a beautiful, beautiful consolidation. But what you can't see on this chart is what took place. Let's get it on a 5-minute chart, and let me get it on a 15-minute chart here. See if I can. It's easier to show what happened. So here is yesterday or Thursday, and so NASDAQ goes up and hits a high, and then it just drops about 200 points, and it took down. Of course, if the NASDAQ drops 200 points, the futures drop 200 points, it's going to take down a bunch of leading stocks with it. And you're getting these big liquidity breaks. But now what you see is a market that is clearly just about, it's in with spitting distance. I wouldn't be surprised if it took it out Monday, come back. And so this isn't a story of stocks always come back. It's this market is giving you intraday liquidity breaks. And normally those liquidity breaks have been associated with the S&P 500. Earlier this year, and when I say earlier, like July and June, the liquidity breaks would come midday. You'd lose like 50 S&P points, like, and then it'd have to bleed off that energy, and then it just gravitates back. And there's a number of things happening in the market, stock nerds, right now that are very interesting. And the VIX, let me show you the VIX, Danny. I want to show you something. Do I have that chart up? There we go. The VIX is, let me let this chart reset. The VIX, you can see, is up today. It's the rare thing that's happened. So there's some forced buying going on in the VIX. And you're like, well, Tim, how is it forced buying? Indices are sitting at their high. Stocks are breaking down. And you've got this VIX here that is crept up now to 25. And it's now typically above the Bollinger Band. I'm going to tell you something about this pattern. Normally, when stocks cross the mid-level, this is just normal standard Bollinger Bands, when they come up to this level here, you get a couple more days of, I would call, pain in the indices, and you're not seeing that. Like what I'm trying to tell you is this is broken right now. Well, Tim, doesn't that mean all hell's going to break loose? I don't think so. I think what you have here is a situation where people are being forced to buy back positions in the VIX. There's something going on with hedging, hence hedge funds, and people buying back positions that's driving this VIX higher. Now all hell could break loose come next week. Maybe it is, but you typically don't see a pattern as pretty as the NASDAQ. And I'm talking about the NASDAQ in particular because it's the leading indice. There's the 195-minute chart. You wouldn't see this holding up. And now there's somebody in our audience that's going to be cynical, and rightfully so, you should be cynical and say, isn't it just 5 stocks, Don alluded to them, holding up the markets? Those stocks would be selling off to the cows come home right now. If the VIX, right now, the VIX is not triggering selling, and that's rare that's when it happens. And it's what leads me to believe that there's some, I don't want to call them shenanigans. It's just there's some forced buying going on that's driving up the price of VIX and VIX futures, and it's not affecting the indices right now. That rarely happens. And so, Danny, how did we get talking about this? I forget where I was going. I just got caught up in VIX. You said, can we talk about stocks? I'm not joking around here. What were we talking about?
I was just kidding. Like let's start talking about stocks.
Oh,
Uh,
well,
And lo and behold, we started talking about stocks.
yeah.
Yeah.
Well, now
Dan has such power.
I was trying to help you with a segue because you're such a media professional, and you were getting mired down with Don and Kiss and other
good
things.
looking. Did you say good looking? I want to make sure people know that. So look, I like the indices a ton here. I think they move higher. And so some of you are going to go, well, show me the ATR chart, Tim. Absolutely. This is still a 195-minute chart. And I think you've got room up here to 12, like we'll just call it 12, 150, 12, 130. Like there's still more room to run here. And some of you are going, well, Tim, what about your daily charts? You're already at that 3 ATR. When you consolidate up here like this, I'm not saying it's going to break out higher, higher, higher. I'm saying it's consolidating, and consolidations at the highs, if the story of the market is still intact, tend to resolve themselves to the upside. And so for a lot of you that have been following my work, I think you get where I'm going. But there's so many new people that watched our shows now, that listen to our podcast, watch the video podcast, watch Don's videos, watch my videos, that you might be saying that's hypocrisy. Third ATR, you sell it. And what I want to caution you on is that kind of black and whiteness about the markets. We discuss our rules all the time, but there's notes inside of those rules, and it's not exceptions, exclusions, it's not excuses. It's just the jazz being played between the notes of music that we're trying to show you, or I'm trying to show you. And right now you have something consolidating at highs that is really super bullish underneath on the smaller time frame charts. And what that tells you as an investor or a trader is, hey, don't short this. Like the last thing you want to do is short it. If you're concerned, go to cash. Reduce your size, reduce your position size. Some of you take some outlandishly large positions, and maybe like half to 75% of your account is in one or two stocks, and you're like, who does that? Well, you'd be surprised. We get people that write to us all the time with this problem, and so, or they call us 855-732-5932 is how you get help with that. But look,
I don't agree on your statement of don't short it. I did short it yesterday, and just as a hedge against the a lot of NASDAQ stocks that I
that's a difference that I want to really point out here. You said hedge for a position that's extremely long.
Right.
I mean a portfolio.
You're
meaning don't sell all your longs and get short because the NASDAQ is, I just want to clarify that.
That's two kinds of short. There's two kinds of short. You can short to make money because you're betting the market's going down, or you've got a lot of really good stocks you picked out, a lot of higher beta growth stocks, and you don't want to necessarily unwind those positions because they may be extended, and Tim's showing you where it may break, it may not. You want a hedge and you don't have to worry about it.
Yeah, that's a huge difference. Hedging is different. Even though you took a short position, hedging based on probabilities is a hell of a lot different than just outright shorting it. And there's a commonality with people that trade stocks. Well, it hit a new high, it has to pull back. And it's so foreign to me, because stocks making new highs, indices making new highs tend to go higher.
Yeah, and so you Jim, you were talking about playing the nuances, the notes between the rules, and that's kind of a subtle difference right there.
Right.
Do you give it a little bit of room, or you hedge like Don did?
Right.
There's subtle nuances. By the way, those notes, when you went to go pick up those albums, did you pick up the Revere Asset album? Did you see that?
What's the Revere Asset album?
Our playbook, man, our playbook. You said the nuances, the notes between the music.
Oh wow,
that did not work, Dan.
Yeah, I was gonna say,
sorry.
I want to help you out here.
The closest you'll get is Paul Revere and the Raiders, maybe on vinyl, but
they did the Snoopy song, right? The night before Christmas, 30 Below, Snoopy, our hero, was flying. Is like Paul Revere and the Raiders sang this 10, 20, 30, 40, 50 or more.
That's them?
It's the Red Baron, right? The Snoopy Red Baron song is Paul Revere and the Raiders.
Let's find
Christmas
out.
Tune. Yeah, great Christmas tune.
Google it, Tom.
Yeah. So anyway.
Go Duck, go it, Dan.
Hey, I updated my Google.
Yes, you did, Danny.
Oh, did it?
And we're all proud of you.
Thank you.
Like we've got some watch list stocks we're going to show you, but here's Tesla, and Tesla is a really good example of this. That stocks making new highs tend to go higher, and you could be saying, well, it's because of the 5-for-1 split coming up. It still hasn't stopped people from shorting it. There's still people running shorts on Tesla, and the swings are so incredibly wild. I think Tesla goes to a split adjusted 2,500. You can see we're trading just under 2,300 right now. I think there's still room for Tesla to run after the split. Monday is a fascinating day with Apple split, Tesla split. I think Tesla, though, does move higher. Now, I will, in all transparency, for some newer clients that join, they have some bigger positions in Tesla than I normally would have for people. And so what I'm looking to do is trim on that strength, give you the playbook, trim on that strength. And then does Tesla break down if it hits 2,500? Well, there's no guarantee it's going to hit 2,500. What if Tesla just sells off? I'm going to take profits. I'm going to take profits on Tesla. Well, Tim, why would you sell Tesla? It's Tesla. They're all just stocks, man. They're all just stocks. You never hear Don, myself, or Danny argue about stocks. Like, I don't make a case for stocks. Don will give you the story behind a stock. I don't even do that. The end in, like something new management, those are important things when investing or trading. But I screen for the fundamentals and technicals that I want, and then they're just pieces of paper after that. And they're either doing what I want them to do or they're not. And when they're not, we sell them. And when they are, we're looking for either other entries or we're taking profits. And so, I mean, if you got to look at Tesla on this daily chart, on a normal chart, let's see. I mean, if you're going to wait for a pullback, I don't know. I mean, could it pull back to 1847? Sure, it could. But I would look for something like this to do more of what it has been doing, which is consolidation. So I think if you said, Tim, tell me what you really think about Tesla, I think that the lower share price come Monday attracts new investors. I think those new investors with the lower share price have a mindset that it's going to go right back to 2,300. and I'm not making this up. So they're going to take, what's the split adjusted price going to be, Don, at 2,300? If it were to pin at 2,300. I just sent everybody on a math excursion.
460.
So they're going to take 460, and I think they're going to try to drive it up to a split adjusted price of 2,500. What's the split adjusted price at 2,500, Don?
500.
There you go. And so you're like, well, Tim, that's only $40. You'll get that kind of price movement in this stock. You're like, well, those kinds of price stocks move that much, have that much volatility. Have you seen the world's largest stock in Apple and its volatility and its average true range? So like what Apple's been able to do, Apple from 400 to 500 in a month. And so now imagine that stock is Tesla, and I think that is absolutely doable. And so if it doesn't happen, then be ready to take profits on what you have, and if you have profits, and get ready to move on. Any thoughts on that, Danny?
No, I think that's.
Danny, you look a little thinner with that haircut. I'm looking at you, and you do look a little thinner with that haircut.
Well, I had a lot of shaggy on there. Got a bunch of it off.
Let's do this. I want to. The rest.
I got two problem children. Let's show them on the charts.
Oh, go ahead. I'm sorry. I didn't know you did. Go ahead. I'm sorry. I thought audio codecs was my only
Ollie.
issue. Ooh.
And this is why you don't go by the fundamentals. Ollie reported 197% sales growth, 59% earnings growth, and is down on the news. You can see it breaking the 50-day moving average there. I trimmed this from 4% to 2.5% going into earnings last night because I only had about a 3% gain on it. So I'm wondering now if I'm going to see if the low gets put in, as often happens with good stocks on a reaction day like this, or if I'm just going to get rid of it because it's going to close the week below the 50-day moving average. The other one is Chegg, CHGG. And I talked about.
Go ahead, Dan. Don, I'm sorry.
I talked about this in the video last night, my video on 2 sell signals. And Chegg is doing exactly what the sell signal that I described, and that is if leading stocks are going to break down, the first thing they're going to do is break the 21 EMA. The next target after that is the 50 simple moving average, and then you want to see what happens there. And if they bounce up but can't get back above the declining 21 EMA, that's a bad sign. And that's exactly what Chegg is doing right now. So that is also on the chopping block.
Can I was about to say, I don't get that move in Chegg, or lack thereof move in Chegg. And I want to explain that. With digital, oh God, I got to mention Zoom. With digital textbooks being rented at a rapid rate because people, well, whether they're on campus or not, more people are doing digital textbooks, but now Chegg is really in vogue. I can make this argument, well, you hold Chegg because there's no one else doing it like Chegger. And what I want to point out is what Don's not doing. He didn't even mention what Chegg does. A lot of you don't even know Chegg is the leader in textbooks for college students and digital textbooks for, I believe, secondary schools, high schools as well. And so that's a good question. Danny, is secondary schools the same thing as high schools?
I think so. Yes, I think so.
Okay, then I just said that it's like saying pen and ink. I just said high school twice there. I didn't need to. But they're the digital leader in this. And what I don't think you do is argue based on the technology. Like I've got Zoom, and I'm gonna, Don, think of a success that you've had, because I want to. We normally.
My comment on Chegg is simply going to be, it might be time for a new base. It's doubled since it broke out in late April, early May, and it just may be time for a new base.
So the same rules, like when someone would say, hey, why would you hold audio codecs? Look, the same rule set I was applying to audio codecs, I applied to Zoom. And so Zoom did really, I held through this shakeout. And the HER charts were my guide. I documented this whole process, and the HER charts were my guide. This was just a violent shakeout. And where I'm going to sell audio codecs, or where audio codecs got sold, is pretty much where Zoom, should have been sold. And so when you take smaller position size, it gives you so much more leverage. I still want to sell at single digits, but I'm giving them more intraday breadth. I'm giving them, because the liquidity breaks have just been awful on a bunch of stocks. Anyone who watches the markets day in, if you look at the end of the day, you don't know what's happening in the indices. You don't see that. If you're watching like Don and I are, and Danny are, you're like, Urgh. Tesla did that. What day was that on Tesla? This has been a long week. Danny, was that Monday that Tesla had Monday, Tuesday morning, Tesla had a bad reaction? I can't remember.
I can't remember.
Yeah, because Danny sent over.
Early in the week.
It was earlier in the week, and Danny's like, hey, do you want to sell some Tesla? I'm like, no, fine. And so, and it turns out we were, but like Zoom reports on Monday, but Zoom did this to me. Now, I've got, what do I have? I have a 2.5% position size in Zoom. And the rules help guide you in this. Like, so if it was a 5% position, I'd probably be a little quicker. But at 2.5%, I'm willing to widen my stops. And we've been talking about this. You gotta be able to widen your stops when the market gets a little volatile like this. And there's a difference. Boy, Danny, I feel like I'm treading dangerous ground, because people want to hear what they want to hear. And I want to call those people out right now. Look at me. Stop hearing what you want to hear. Hear what I'm actually saying. When the indices look as good, that's why I started with the indices. When indices look as good as they do, you can take smaller position size and widen your stops. If the overall market, which 70 to 80% of stocks follow, start breaking down, if the indices start breaking down and individual stocks are breaking down, that is not the time to widen your stops. That's the time to short your stops and get out. Danny, can you say that a little more clearly?
Well, yeah. So look, everybody, so many people want to just do like a absolute rule, 6% stop or 7% stop. First of all, each individual position will be a little different because depending on the volatility of that stock, you want to have like a beta adjusted stop loss. Some stocks move 3-4% a day, especially leading stocks. So you can't have a 4 or 5% position stop loss. You'll get wigged out just in normal trading. You got to have an 8 or 9% stop loss. Now, Tim is also saying that depending on the market, if the market is adding support to the is supportive, then an individual stock may come under pressure in the short term, but it'll be just fine in a week or two. So you'll give it a little bit more room, whereas in a ugly market, even the leading stocks, you've got to tighten your leash because it's a more dangerous time. So you don't just want to have a static, hard rule for every single position and every market.
Yep, and so that same rule set, stock nerds and market lovers, applied to CRM. So I bought CRM just a couple weeks before earnings, and I bought it, and I outlined this in a video this week. Bought it, there's the mean, and you can see it comes back and gets the mean. I got it in August, and then it consolidated here, and now here is the day before earnings, and then here's that earnings reaction. But look, CRM's only a 2.5% position, but a 2.5% position that's now about 45% or 42, 45%, something like that. But look, I didn't have it reported earnings, and I'm the beneficiary of how it's accepting this report. There was no premonition. I didn't look at expectations. There's no reason why it met my criteria. It fell into the category that I had over a 10% gain. The chart looks good in the market. The overall markets are great. So I'm going to, that is a hold. And so I called Danny. I go, look, this is why I want to hold it. I think, would you see something differently? We consult. It's always good. Look, when I always run by something by Danny or Don because it's good to have another set of eyes, and then you get that result. It's nothing on my part that I didn't call Danny and go, Danny, I really think this is the quarter that Mark Benioff is going to really nail the earnings. Nothing like that. It met my criteria. It got on my radar screening wise. The same screen I showed you, stock nerds, at the beginning of the show. It came on my radar, bought it, looking for the run into earnings, got it, met my criteria to hold it, and then I held it. And that's an application of the rules. And so it's not a back patter. It's just sometimes those things work out this way, and it's the rules that get you in, the rules that get you out, and understanding the expansion of that rule set. It comes with experience and a little when the market ages you, which the market has aged everybody who's ever participated in it. Anything, it just has. I mean, if you're not being aged by the market and developing a veneer and learning something every day you participate, I think you're doing it wrong. So I want to do this, Danny. This is the note. I'm going to give you what the headline should be for the email right now. Let's produce the show real quick. The new stock alert service from Revere. Okay, put quotes around it. We have a new stock alert. Did I tell you about this? We have a new stock alert service.
You didn't, and I'm not sure we want to do it, but go ahead. I'll say grace over it after I hear it.
Yeah, there you go. And then that's going to get me into Don's discussion with a couple of people on why indexing, I think, is harmful. So we'll do that. And then we'll do watch list stocks. I want to get Don's thoughts on stocks going into next week. And then we'll get the normal outro. So let's do this. Danny, the new stock alert service. You ready for it?
No.
No. Okay, great. Fantastic. So in addition to Revere Asset to get a hold of us, the three of us are all on Twitter. And for Twitter, it's really become, this is Don D. Vandenborg. So it's just the letter D. Vandenborg. It's the way to get a hold of us very quickly. So if you follow us, and I want to encourage everyone to do so, if you follow us, Even if you don't have a Twitter account, just get a Twitter account. You're going to get videos like this. Now, Don.
Is that a cowboy shirt?
That is not a cowboy shirt.
Do you hear what he's dancing to?
I wanted, Don intercepted there.
We cannot hear.
Oh, you can't. It's Baby Got Back. So he's reading this book about, it's a children's book about my butt's broken. I'm not being facetious. It's like his new favorite book. Like, it's like my butt's broken. There's a crack in it, and and he wants to know why his butt's broken. And so it's a really funny book. So we're reading it, and then I think I said to Tanya while we're waiting for the doctor to come in. It was Nora's 4-month checkup. I said, well, you know the companion song to that, right? To the book. And I started playing Baby's Got Back on my phone. Remy hops off Tanya's lap and just starts doing this dance.
Had his coffee for breakfast, I see.
Yeah, every day. Every day. Like he's got the hand clap going. This kid, I'll tell you what, hears music. Yeah, man, he hears music and joy just shines through this kid's heart. I love him. He's my spirit animal. Remy is completely my spirit animal. Love that kid. But anyway, what you'll also get is stuff like this. Danny, this is the stock alert service. So I say it tongue in cheek. If you follow Don and I on Twitter and Danny, we're going to send you stuff like this. But you got to follow us and you got to set your alerts to, hey, Tim tweeted or Don tweeted or Danny tweeted. And here's Tesla at 2100. And just pointing out the things that we talk about in our videos are the things that we tweet about. And we just update them, whether they're about to break out or break down. And look, it's not on a regiment. It's a free service, folks. So when I see it, I'm going to do it. And if I think it's beneficial,
it's something interesting for research.
That's exactly it. And so when I say stock alert service, I'm just showing you things I'm looking at during the course of my day. And it might occur to me that other people in my universe might find it interesting. I thought that was an interesting pattern. And so what might not be obvious on the daily chart, let me break it down to you on a 15-minute chart. And there's the note. If it takes out 2129, 2200 may be the target for Friday. Well, as it turns out, we'll see what we pin. Tesla's at 2255. We'll see what happens into the close. But yeah, like that's all interesting to me. Like here's CRM yesterday. You know, CRM was at 275, and oh, you can't see there's the 1 hour pattern. That's a beautiful pattern. And into the close, it went out and took out that. I guess, did I really post 2 hourly charts? I guess I did. I didn't mean to. I meant to post a daily. Oh no, I posted a daily chart. That's a daily chart. Yeah, like it went out and it closed at like 278. It closed at the high, and now it's trading what 270 here on a Friday. So you'll get stuff like that, but you'll also get this, which is joy. And then with Danny, Danny makes you aware of what we're doing here. He's got some conversations in here, but it's Don's I want to focus in on here. So Don had a conversation with this person, and this person made a statement, and you can read it right there. TSM is total stock market. Can you beat a totals? The answer is yes, you can. And Don, can you describe this conversation? Tell me the conversation and give me the 5 things that are wrong, that could be problematic with just indexing. And I want to be really careful here. Buy and hold indexing, which is what this person is advocating. It's buy and hold indexing. It's not don't use the indexes. It's just you don't need anything else. Individual stocks should, and I should scroll through the conversation. As I scroll, can you describe it to me, Don?
Yeah, the last sentence in the tweet there. Go back up. Do you need to beat a TSM index fund to meet your financial goal? If the answer is yes, you should lower your expectations. Whose financial goals included a pandemic?
Yeah.
Did any plan that any asset manager or financial planner ever put together include a 50% loss in the indexes in January 2000, and then another 57% loss 8 years later? The answer is hell no. And the only way to get around that is what I kind of tried to indicate in my response to him. Would you rather have a total market return over the past 24 months, including a 20% drawdown in Q4 2018, and then a 34% drawdown in 2020 Q1, or maybe 200 basis points less than the market, but no drawdown higher than 12%? So what I'm trying to say is, you're okay with the massive drawdowns that you're going to get in sometimes very short periods of time, and also the fact that from 2000 to 2010, the index returned zero because of the 250% drawdowns. I'm asking a guy that advocates for indexing if he's okay with that, and of course, all he could do is dodge the subject and say, I'd rather not gamble on active management or pay the associated fee. So this guy used to be a pie chart guy. He's not a pie chart guy anymore. His quest now is to charge $500 an hour to tell people to ditch their advisors and buy 2 ETFs to eventually create either a 60-40, a 70-30, or an 80-20 portfolio, and just leave it alone.
So why do you have to pay him $500 to do that?
Think of the value, Dan, that you no longer have to pay your advisor anymore.
I'm saying, why don't you just do that on your own? You don't need him.
Well, there are people that don't. There are a lot of people, and we get them as clients, that are unhappy with their pie chart advisors. So whether it's us creating a stick with your advisor, do it a better way, participate in up markets, get out of the way in bear markets, or do it yourself with a 60-40, it's very easy. It's up to the person to decide what approach they want to take.
Yeah. But a couple of things. To accept a 25% drawdown.
A couple of things real quick. I want to pause there because these are some really good points. But what I want to point out to people, well, of course you're saying this. You guys are active managers. If you haven't noticed the premise of how we communicate with you, who's watching this video and might be skeptical, we give you everything for free. If you want to take Don's watch list and employ it yourself, you're free to do so. I give you the screens to which I run every week, and I find stocks with, give them to you. We show you, more importantly, our losses, because it gives you the courage of your convictions, how to take them, and we show you how we position size, and we show you when we harvest profits and why we do. So you can take all of our active management tools and employ them yourselves. The biggest thing that separates, we're no different than you, but there's such a psychology in the markets that gets you to take action or not take action, or prevents you from finding success. And that's, if there's a separation of what we do from maybe what you're doing at home, or why would people even come to you if you're giving them everything? You have, if it's not you, I want you to be empathetic for a minute. There are so many people scared of what's happening in the economy and the world right now. There are so many people that were bruised so badly from 2008 that they can't take action. There's a mental block that will not allow them to do so or see what we're seeing, and they're afraid. And we help those people. And that, if that's not you, that doesn't describe you, I'd like you to just put on your empathy hat for a minute and realize that there is a tremendous amount of people like I just described, and we help them. Because you have every right to be scared. You have every right to understand what unemployment is. You have every right to see small businesses getting hurt. You have every right to believe that the transfer of wealth that's happening right now because of this market, like what the Fed's done, that's a whole nother show, Danny, please don't go down the path, with funding public companies, and people have access to funds. Like Carnival Cruise Line should have went under, right? Because who the hell's going on a cruise? But because the Fed's backing it, people are willing to buy their debt and keep them solvent. But they're not buying the debt of Bob's Bakehouse and patisserie, because Bob's Bakehouse and patisserie is a high credit risk, just like Carnival Cruise Lines is. But J-PAL isn't backing the small and medium-sized businesses in this country. Well, that's what PPP was for. It's running out, folks. It's running out. Look at what the airline industry is telling you. They're going to lay off half of their effing industry. MGM just laid off 20,000 people this morning. Look, but yet I just talked about, and I spent an enormous amount of period of this show telling you about the bullishness of the markets right now and what we're seeing. So the people that are watching the news and they're absorbing all the economic information and they see what's happening in their towns, they come to us because it's hard sometimes to operate and separate the economy from the markets, and that's what we help people do. But I want to really point out something to you that is a huge difference with what we do, what active management should be. It should be rule-based. It should have rules for entry and it should have rules for exit. And I'm going to tell you from the bottom of my heart, there isn't anybody who got rich indexing. Just let that sink in. We're not saying that indexing doesn't make money. You're going to suffer massive drawdowns. And for a lot of people, when those drawdowns happen, did you need the money? Cynical people will say, well, they shouldn't be in equities then if they need the money. Well, where are you getting your return at? The Fed since 2008 has forced you into risk-associated assets, not safety. You're not outpacing the cost of bacon in anything with a risk-free return. So with that said, nobody has built. You're investing. Did you get into investing to simply keep up with inflation, or did you get into investing and do you invest the way we invest? Our whole retirement system is based on this, the returns of the stock market, folks. And you're sold through marketing how you're going to become independently wealthy through investing. But yet so many people don't. And it's because of people telling them that they're too dumb to buy stocks, that you just buy everything because you can't figure it out. And I'm going to tell you something. A mentor of mine, he hired me right out of the Marine Corps. That was William O'Neill. He built 4 businesses in individual equities. He was first a broker with Hayden Stone, realized that the stocks that have the biggest price moves, you can identify them if you understand the 7 common traits before they make their biggest price moves, which we outline for you every week. It's amazing. And then he took that money and he just didn't keep it. He built a business to share it with people on the institutional side, meaning the mutual funds and pension funds that take his work. And then he built Investors Business Daily to share it with people like you and me. And then he built a printing company. And then he built another company on top of that. And I can't begin to tell you that indexing doesn't create wealth. It might create stability. You might be able to go buy a car. Maybe you put your kid through school with only 1 or 2 Stafford loans. But indexing doesn't get your parents out of the nursing home with home care. Indexing doesn't take care of your children. Indexing doesn't allow you to take everything that you've worked for and then as a gift, give it to the people you love when you're maybe leave this earth. It certainly doesn't. Indexing doesn't allow you to donate to charity the way you want to. If you want to be average, if you want to be the color tan, who wakes up every day and goes, you know what, God damn it, I want to be the S&P 500. I just want to tread water and that's what I want to be. If you want to get ahead, individual equities are what you do. The only pockets that are lined by, the only people getting rich from indexing are the people who purport that you are too stupid to buy stocks, so pay me to build you an index. It's the highest form of hypocrisy. It's the highest form. It's financial terrorism is what it is. You're smarter than that. I know you are. I met 50,000 of you every year when I worked for Investors Business Daily for all those years. I know the power of what individual stocks can do with applied rules. I also know that if you don't have a rule set, they will destroy you. Rick Ferry thinks you're too dumb and you should pay him. And the only people that purport in buy and hold indexing are, it just lines their pocket. I'm sorry, Don, I just hijacked that and I didn't want to. Can we go on?
a lot of what you mentioned is all contained in this string, because I replied, he said, I'd rather not pay active management or the associated fee. And I said, well, the 200-day moving average can be a financial life preserver, which I've discussed many times in the discussion of the 11 and now 12 bear markets, that if you just get out of the way when the indexes break the 200-day moving average, that is a life preserver. It keeps you from drowning. And then his smartass comment, just that easy. Wow. And then I say it can be combined with other technical tools, but you can keep it simple with your associated drawdowns and insomnia. And then, of course, he pulls out if you have insomnia, you've got too much in stocks, which you can't have it both ways. He's saying that people are going to be fine if they just put index and rebalance. And then they say, but if they get scared, you can't have too much in stocks. So are you going to get rich in bonds? Hell no, you're not going to get rich in bonds.
Well, here's the other problem. Hang on, the Fed has dropped interest rates so low to zero rates. Bonds are extremely risky now, more than they ever have been. So if you invest in bonds, when interest rates start to rise, bonds are going to act like tech stocks in a bear market.
Yeah.
So then, of course, he goes to your clients taking too much risk. And then what Dan is fond of saying, the risk is in the market, not on your risk tolerance questionnaire. And he says, I don't use a risk tolerance questionnaire. So how in the hell do you know that you say your client's taking on too much risk if you don't even use a risk tolerance questionnaire? There's no due diligence. It's a guy with his feet up on his desk just throwing shit out there, thinking he's helping people. It's not helping people. And then that led to two people. One guy saying, I just charge a $5,000 flat fee, which is getting rid of everybody that's got less than a $500,000 portfolio. And it's effectively saying, I don't give a shit about anybody that has less than a $500,000. Revere, we take every size portfolio because everybody starts somewhere. And then there's another guy who had a smart ass comment, and he just got rid of all of his clients unless they would pay him a minimum of $10,000 fee each year.
Is that this guy right here?
I don't know which guy was which. Yeah. There was two guys. Fair quality service, and then I looked at his thing, and they have it. And the other guy he might have the $5,000 minimum, and then there was another guy that said he got rid of all of his clients that wouldn't pay him the $10,000 fee because he figured out how many clients he needed to collect how many $10,000 fees for him to meet all of his bills. Which is, are you freaking kidding me?
It's about
who do you care about? Exactly, it's about my retirement, not your retirement.
Yeah. Just it's astounding that the conversation that took place here.
With technology, you're able to put people in the strategies, groups in the strategies, and you're able to manage. In fact, the only really limiting factor for a strategy is maybe rounding error with the high price stock. So if it's a smaller account, you may have real small account, you may have to do ETFs and mix in a few stocks. As you get over the 50 or 60, you can go almost all individual stocks. It's just not true. And as the fractional shares come on board, you'll be able to do just about anything with any size account.
The smugness of this is
his access comments there.
Yeah.
Well, you never had access to the guy that charges $5,000, so you can't complain about it. Access. We're talking about access. The smugness of just saying, you've got less than $500,000, we don't care about you. Come back when you've got $500,000. And they were legitimately defending that that's a good way to do business.
It's not. And I can't believe people. Look, it's a shame. It's just a shame because the marketing on Wall Street, the marketing by Wall Street, is all aimed at. The reason why buy and hold is so talked about and marketed is because if you leave, these people don't get paid. If you sell and you're not invested, these people don't get paid. And to say that I don't look, it's the guy who says philosophy, right? Again, philosophy. This is a smug individual who it's his choice. It's his choice to not help individual investors of all means, but that's not our choice. Our choice is to help every investor, no matter what your minimum is. We don't turn anybody away. We want people to be able to find success. And if they can't do it themselves, or they don't want to do it, or they want help doing it, we're here. But we don't discriminate like that. And I think that's what gets under my crawl. It's so discriminatory. What Rick Ferry's saying about don't get individual stocks, I believe is oppression. You're keeping people down. I feel the same way about not allow. If you're so good at what you do, help everybody, because the society will benefit then. But you're so good at what you do, you're only limiting it to people who have means. And I can't think of something more awful than those words. It really absolutely aches my soul. And I don't know.
Active versus indexing is as polarizing as Democrats versus Republicans, frankly. I mean, there are people that are entrenched in their camps, and there's nothing that you can do to change them. But there are people in the middle that we can turn, and we've turned a lot of them.
Yeah, but turning people away because they don't have the means and they can benefit. I mean, look, I know I joke around with you a lot, and I know you all think I'm handsome, and I'm just telling you that I think I'm handsome. But the truth of the matter is, like, we help a bunch of people, man. Like, we help people be able to afford the things that they've always dreamt about, which aren't narcissistic things or grandiose things, but like just putting their kids through school, or making sure that their mom and dad don't end up in some kind of awful home. And for, what is his name? What is this asshole's name? John Joe?
It doesn't matter. The whole point is
it doesn't matter his name. It's wrong. Like, if you're so good at what you do, help the people that are coming to you. But it's the highest form of discrimination. And I'm not going to help you because you don't have enough money. F you. Come to us. We'll absolutely set you free. And I had to turn away from this conversation because it makes my blood boil. Like, I saved it all for today, and I'm actually keeping myself contained. The fact that I only called one guy an a-hole. What's the A for AIG stand for, Danny? Everybody knows, you know?
What's the F in Wells Fargo?
Man, I'll tell you what, this John, I'm going to put in my top three of.
Let's move on. Come on. We made the point. There's just a better way.
That John Joe just going to help.
Just a better way.
Art Briles, Wells Fargo, they're all in the same bucket. All in the same bucket, man. And look, and these two people, they don't have the wherewithal to actually, like, they don't answer Don's question directly. They don't. And Rick Ferry doesn't have to. He has no obligation to answer the question directly. But then when you make these statements, and someone challenges you on it, what is so risky about active management? And again, I want to be really clear here.
Here's a real good point. You talk about risk, okay? You know, even the regulators, when they come look at you, so they consider transactions, the more transactions you have, the more risk you have. See, we think of it as totally different. I think when you're in the market, you have risk, or when you're out of the market, you don't have risk, you know, ignoring inflation. So when you're in cash, you don't have risk. When you're in stocks, you have risk. So just very quickly here. So let's just take the Protection portfolio. Its drawdown this year, where it's, you know, from it was down 8.3%. Okay, on March 23rd. The S&P was down over, like 25-30%. The Russ was down 40. Okay, now Dow's up over 20%. The S&P is up around what, 7-8. So it's got much less drawdown. Tim, the stock and ETF portfolio is up double digit also. It was down 7.3 on March 23rd. So, but everybody thinks, well, but you have some, you know, man, you're doing some transaction. Yeah, that's right. We sold some stuff. We moved to cash, so we didn't get slaughtered. We went down a third of the much as the market, or even a fourth. So how is that more risky? How is active management? How does that diversification help you? Because when it goes down, everything goes down. There's only a couple things you want to own.
There's nothing in life that that you're going to say, just close your eyes and hold on, it's going to be great. Or maybe a roller coaster at a theme park, but that's it. Like, hey, drive down the road, you're going to be fine, don't even look, which is what people do who text and drive. And it's not good. I don't understand why buy and hold without rules, without any other thought, is the most risky thing you could do. And I need to tell you why. Well, I'm going to have Don tell you why. It has everything to do with sequence of returns and when you need the money. And when you need the money, don't let someone tell you, well, you shouldn't be in equities. You have to be in risk associated assets if you just want to keep up with the cost of inflation. The Fed tells you there's no inflation. There is inflation in food and everything else that you buy. Don, can you go over the sequence of returns?
Yeah, sequence of returns is just, long term, the market returns about 8% on average annually, but you don't get 8% every year. If you did, everybody would be happy. You get, you get plus 12%, plus 14%, minus 8%, minus 30%. You never know when those minus 30% are going to smack you. And as Tim mentioned, it could be right when you're getting close to needing the money. And that's why we're so adamant about protecting the downside.
Yeah, there's to somebody, and if you're cynical and you say, well, you shouldn't have sold, stocks always come back, indexes always come back. But what and when do you need the money?
They came back this time. The 2000 to 2010 returned zero, an entire decade.
Let's pause on that for a second. That is such an important delineation. There was a tremendous amount of money to be made in markets between 2000 and 2010, but the indices returned what, Don?
Zero.
There you go.
With 250% drawdowns and a bunch of very strong rallies. How about dodging the drawdowns and participating in the rallies?
They called
it. You don't even have to catch all the rallies, just a chunk of them, and just missed a chunk of
the drawdowns. Yeah.
Now,
and use the 200-day moving average as your dividing line.
And for us at Revere, we're documenting. The thing that separates us from every other shop in the free world in China is we document. If you go to Revere Asset and you want to see how we navigated all the markets since I came on board and started doing videos. Look at this, Don. It's 100, page 1, page 2, page 165. 165 tabs of documentation of how you can be further ahead, of how you sell, of how
Look
you
on
buy.
165, see how far back it goes.
Got it. Great question.
2014.
Yeah. Oh, yeah. This is when I was there, and I said, Danny, we need to start doing videos, not writing. Yep. You can go back and just see the evolution. And it's not that indices. I keep repeating it because people hear what they want to hear. Indices might be going up from the lower left to upper right. You have all those drawdowns, but how much further if you owned Adobe, if you owned a PayPal, if you owned an Amazon and didn't even buy and held them? Like, what if you just traded them like we've been trading in and out of Tesla, 75%, 50%, 25%, 10%, another 50% to the upside.
And you got zero out of Tesla if all you bought is the S&P 500 because it's not in there. It's the sixth largest holding in the NASDAQ 100, which is one of the reasons why it's so far outperformed the S&P 500. You got none of that.
For people to tell you that it can't be done, always question it. Just why can't it be done? No, it can be. And to not acknowledge that it can't, to not acknowledge that it is being done. I'm telling you, I believe, this is me, I think Don disagrees with me on this. I think indexing is done. I'm very early to this. I think that the world is going to come to the conclusion that you don't need Vanguard. There's going to be some low cost. You don't need people. I just can't believe there's people to tell you. Danny, people to tell you how to index is like paying somebody to stand outside of your car and having them tell you how to turn it on. Like, I
agree with I agree with you that it's just a cookie cutter, boilerplate, easy approach, but it's also a lazy way for Wall Street or the brokerage firms to kind of mass deliver to all these people. And it's still a huge percentage of the money for the retail investors.
It's the lazy, Danny said that it's the laziest thing that can be done. Look, Rick Ferry doesn't look at your portfolio every day. The John Boy, or whatever that guy's name was, doesn't look at your portfolio every day. Like when they say just rebalance it when?
No, they're just doing a 30% in equity fund, 70% in bond, or 60-40, and putting you in and letting it go, and then looking for the next match. You're
too heavy in the things that are working. We're going to sell those things and rotate you into the things that aren't working. There's a reason why they're not working. How many people, Don, got rotated into banks, energy, and emerging markets because the successful part of your portfolio is too heavy? Hey, you have too much fresh food in your refrigerator. We're going to rotate you into some spoiled food. You know,
we're going to give you some rotten groceries.
Yeah, like, you know, you're doing really good on this medicine we have you on. I'll tell you what, we're going to replace your medicine with some placebos. Let's see how that works out for you. Like it's have some sell rules, have some position sizing rules, understand the velocity of money and how to harvest profits. And every time that, and I don't have these conversations anymore with people. I don't. I refuse to endeavor into it. And it's not that I leave Don out there hanging. It agitates me to no end, because I think these people are the absolute worst people in the industry. I think they don't really care about other people because of Don, the guy who goes, I don't help people unless they have a certain amount of money. I can't begin to tell you how awful that is. Just absolutely the worst. That human being is such a vapid soul that he won't help somebody. I come to the conclusion, Danny, that their talent, they don't have the talent to do what we do. And now I'm not joking. Like, I don't think they possess the skill set necessary. They don't have the right
Most
mindset.
People don't. Most people in our industry don't. They're not trained for it. They don't look at these trading methodology. They don't learn. And then some of them believe this modern portfolio theory. It is a theory.
What do you hate more, Don? Modern portfolio theory or stocks under $10?
That's a tough call.
Ooh,
it's a real tough call. And so, look, stock nerds. Look, if you're watching this, there's a really good chance you get what we're saying. But the problem is it's your parents and your loved ones. All these teachers that have these horrible annuity salespeople come to their schools and get when I say get in bed, I mean take the teachers on the advisory board out to lunch and shower them with gifts that they're not supposed to be given. There's so many better choices. We manage 401ks for folks, and so many people don't have brokerage link. They don't have a way to buy individual stocks because the companies don't want you to. They don't, and they penalize you if you trade too much. And they guise it as it's too hard, or they guise it as we're protecting you from yourself. And all they're trying to do is, once they get your money, they don't want to let it go. Danny, what firm are we just fighting with? This person is transferring from where? Is it Bank of America? Is it E-Trade? Who didn't want to give up the money? Is it CREF? Which one of those? All of them?
I'm not sure. Well, we've had issues with sending the money with TI CREF, and it's been everybody. It just depends. But they don't like doing full brokerage, offer full brokerage in 401ks because they want the mutual funds because that's where they get most of their fees. And what employees don't realize is the almost always the cost of the 401k itself, the administration, is borne by the employees, not the company. The company's not paying for the 401k management. It comes out of the fees of the ongoing plan.
1000% right. So let's do this. I think, look, if someone in your world has questions on this, or not questions on this, they don't even know we exist, is in a buy and hold mentality because they just don't know, send them this podcast. If you want to know, well, how would you guys handle a situation with my 401k, which is only buy and hold, and it's what we described, call us. We can absolutely positively show you what we're doing for other people. And again, we don't have any minimums. So don't ever, and even if you don't want to become a client, just call us. I swear to you, we're going to give you an answer. It may not be what you like to hear, but we're going to help you because that's what you do. You don't discriminate. It's just awful what these people do. Just awful. And that guy that, go ahead. Sorry, Don.
Go ahead, Dan.
No, I wasn't going to say anything else.
Okay. I was going to lighten things up and say also, if you have friends or family that think that the can actually does say tuna fish, I'm going to prove to you that it doesn't right here. See, it's just, that's sun-kissed, solid white albacore tuna. It does not say tuna fish.
Do you have a fridge right next to the screen, or did you actually test it?
I had my kid bring it into me because I had to know.
That's fantastic. Let's do this, Danny. I'm gonna have I'm gonna have Don go over some watch list stocks, things he's looking for next week. But Danny, do me a favor, and then I'll come in with a couple thoughts. But do the normal outro to the show right now, please.
Folks, listen, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com. Just to ask them to go to check out our research, what we do. If they like it, they can hit the subscribe button. That'll send them our daily market insight, a short 10-minute market video after the close every evening. And also they'll get this radio podcast delivered right in their inbox. Also webinars. Don does a webinar about once every month on a Wednesday at noon Eastern. And those are about an hour long, Q&A. At the end, and even if you can't attend because you're working, he'll send you the recorded link or the podcast after it's done, and it's very educational. He does different topics, whether it's gap rules, relative strength, overall market, portfolio management tools, all kinds of stuff. So all of our research we give out for free. And if you can reach out to any of us at Dan@revereasset.com, Tim at Revere Asset, or Don at Revere Asset, and you can always call us old school at 855 Real Wealth.
Real quick, for the folks on the podcast, if you don't like to just watch on your phone or your computer or tablet, or by the way, I don't know if you know this, Danny, you can actually play this on your phone, and if you have an Apple TV, an Amazon Fire, or a Roku, you can screencast this to your phone, or if you have a way to get an internet browser on your phone, you can actually go to Revere Asset and play the video on your phone so you can see everything in a big wide screen. We've got people that do that. They write to me going, hey, I'm playing the video on my TV. I'm like, that's really cool. 56 inches of me.
That's one thing I've never heard before.
Hear all the time.
Regarding
let me show you something. If you want, if you would like, let me show you how you can do this. If you like to listen while you're walking your dog, Uncle Tony likes to listen while walking his dog. You can go to Apple or Android, and you can also download it to your phone right there. We don't cover that enough. And so let's do this, Don. Let's take them through some stocks. What do you want to see?
TLT 2 weeks ago rolled over and broke the 50-day moving average, rallied back up. Note on that rally, it didn't even get to the median. That did fail on a rally into the 50-day moving average and now has made a lower low. If interest rates continue to rise like they have been, that could impact the housing sector, which has been a big winner in this latest rally. And I believe rising interest rates are typically not bullish for metals also. So I'm watching that correlation closely. As far as the 2121 goes, no changes as of last night, but there might be a couple. Ollie's definitely going to fall off of that list as it has no chance of reclaiming the 21-day moving average. Well, I won't say has no chance, but I'm pretty confident it's not going to happen. Also, some Chegg and TDOC showing some weakness. TDOC had a nice comeback after that Livongo merger announcement, and it's sitting right there along the median, the 21 there. My expectation, I don't have predictions, is that this is going to hold the 50-day moving average and work higher, but I think that Chegg is going to build a base.
Okay. And just because Don thinks it's going to build a base, what does that mean?
It means it's kind of what I talked about in Thursday's videos. Broke the 21, came down to the 50, rallied back up, but could not get back above the 21. Leaders during their run stay above the 21 EMA, and now it's rolling over at that declining area, which means it could go down anywhere from 15 to 30%, build another base before it starts making another run. And it did double since it broke out initially, so it just may be time for another base. Leaders don't go up straight all the time. Understand that half of the stocks that you buy aren't going to work. Just like in an index, there are half of them are going to outperform the average, half of them are going to underperform the average. Just understand that everything that you buy, just because you buy it, you got to get your ego out of the way and understand that some are going to work and work very well, and the ones that aren't going to work, recognize it as quick as possible, keep your losses small, and get out of the way.
Oh my gosh, I literally, Don, was looking at this note for like 10 minutes. It says like right down here, 50% of the S&P. I couldn't remember what it was for. It was for, I take notes for the radio show during our morning calls, things that just might come up. You just covered what I wanted to talk about. I couldn't remember. Like, what is this note? 50% of the time with the S&P. You literally just covered that. Thank you.
Just like the hypocrisy thing, Tim. I make notes too.
Yeah, seriously. Danny, how hard of a show was this for you today? You looked pained when I was telling people why. What's that?
I'm doing very well. I'm fine.
Yeah, like you've
been running on a little bit long, but that's kind of not that unusual.
So awesome. Any more stocks, Don? Or I got a couple.
Nope. Go ahead.
Okay, so look, I like Zoom. Zoom for me, it reports earnings Monday after the close. So I like this.
That shakeout, that is such a lesson in there. That's one of William O'Neill's, the shakeout +3. The way that undercut on the left side of that chart, where all those tails were touching the blue line right there, undercut and then reclaimed it and took off to the highs.
Yep. Something audio codecs could not do. I like Zoom. It's a hold for me, just based on my rules. But we'll see what happens on Monday. I mean, Monday is another market day, and it's a market. Anything can happen. I like the aforementioned CRM. CRM, even though it's at, this is a beautiful consolidation happening here. And like I said, you kind of got to go to an hourly chart. That's a beautiful hourly chart. Take it down to a 30-minute chart. Just a gorgeous pattern that's forming right here. And so if it takes out 278, I'm looking for 300. Big round numbers, law of big round numbers I like. I like Tesla, even though Tesla, I want to show something to you about Tesla. People are going to see Tesla's down 20. Tesla went up to 23.18, traded all the way down to what, 21.87. It's trading 22.17. I just want to show you the ranges on Tesla because this is, people, it's just such a unique individual property right now. So let me get this circled. The average true range on Tesla is $103. Over 21 days, the ATR in this stock is almost $104. And it's vicious. Like I'm telling you, it's one of the most vicious traders. I've so many lessons to be learned with Tesla, and how, Danny, it looks like you're watching a horror movie. You okay?
Yeah, doing fine.
Is somebody burning a brisket? Did somebody
No,
no, somebody not listening to country western music in your
no,
world?
I was trying to read that. I was squinting my eyes. I'm trying to read that.
Somebody steal your Longhorn off the front of your
No.
BMW?
Oh my
No,
gosh.
no,
No.
I don't have a BMW.
Danny drives American.
Does your horn make the sound of like the General Lee did, Dan?
No.
Just wondering.
Oh, I think that was down in Georgia, right above Florida.
Oh,
Yes, it
my
was.
God. So I like Tesla there, and let me show you one more that's breaking out, and it's something that you wouldn't suspect. Walmart. So Walmart is at a new high today, and so you can see Walmart was just after. This is a daily chart. So here's earnings. I've held Walmart for a while now. Comes up, and I had a 5% position in Walmart. I sold half of it for a gain, held the other half on earnings. And you can see it just consolidated, but look how it held at 21, held at 21, 34, nothing too major. And because it's a 2.5% position size, you're giving it room to breathe in this market. And they come out yesterday or the news gets reported. Hey, we're looking to buy TikTok with Microsoft, which, by the way, I'll get to Microsoft in a minute. This is probably going to 150 if it can claim 140. And you're like, well, no, Tim, how is that really profound? It's just big round numbers. And you have to understand the size of these stocks. I mean, how many shares of Walmart are there out there? And the size of Microsoft. And to hit 231, it's backing off a little bit here from yesterday's high. The amount of money that it takes to move Walmart, to move CRN, to move Apple. I mean, the amount of money it takes to move these stocks the way they've moved, it's astounding. And I do want to tie it into one last point. Don, I didn't look at it. Can you look at it while I stall here real quickly, the AII survey, please? Because
Sure.
This is important. Look, there's people piling in to this market. It's just not you. And what do you mean? Bank of America notes by individual investors last week, record outflows. So we'll just call that RO, record outflows by individual investors. And yet the money that's coming into the market is substantial. It's not these small cap stocks. I mean, these are tremendously large cap equities that are just making these huge moves, and it takes an enormous amount of money to do this. What's the AII study give you? I mean, yeah.
The bulls picked up, but
Okay.
still the historical average is 38%, only 32.1% bullish, while indexes are at all-time highs. With these numbers, you would think that, I mean, it's counterintuitively bullish. It's a contraindicator. You would think we're at the lows.
Can you explain the AII? Well, one second. Dion, can you explain the AII study just real quick, what it measures?
Yeah, AAII, the American Association of Individual Investors, they poll their members every week and they just ask them a simple question. Do you expect the market to be higher or lower over the next 6 months? And the typical AAII person combines technicals with fundamentals, and it's out of sync with the NAAIM survey, which is showing a large amount of bulls. So you're getting some divergence there. And I guess the bottom line is that the market always seeks to confuse the masses. So you might as well just depend on price and volume, period. And that's why these are a secondary indicator.
And Don said something.
Don just buried the lead. That's it, price and volume.
It's counterintuitive. Can you describe the counterintuiticity of the AII study? Like why, if most of their members are bearish, they're not at their historical bullishness, why that's bullish for markets?
Yeah, there are more bears than bulls. 39% bears, 32% bulls, which is well above the historical average of bears of 30%. So
can you explain that, Danny? Why that is counterintuitive?
Yeah, there's a lot of people that are bears. They're already gotten defensive. They've already moved to cash, and so sometimes it can be a contraindicator. If you get very few bulls and it's low, a lot of those people are also not, invested. So there's a lot of cash on the sidelines. So just a little bit of buying can make that thing rally, and all of a sudden more people get a little excited and it puts money to them.
People are waiting for a pullback in this market that they really haven't gotten. The way, and you have to define what a pullback is. And Don and I talk about the 21 to 21. This is the lowest risk entry point you'll find. Maybe you take a half position if it falls to the 50, whether it's an indice or a stock. There's so much money still sitting on the sidelines that could potentially keep this going. I find it fascinating that, and Don is highlighting the AAII study, which is something that has been historically good for measuring contraindicator, for measuring as a contraindicator. Like if all those people were bullish, I'd probably be a little more bearish, to be honest with you. Although it's a secondary indicator, it would give me a little bit more pause to go, oh, that's interesting. They've all switched, and it's a really powerful study. I'll tell you what, if Don can send you the link to it, if you email Don, it's don@revereasset.com. Reach out to him. We're more than happy to send you the link that helps you elaborate more on that study. Any saved rounds or alibis, Don? Anything else?
what is that noise?
I don't know.
Dan's
That's
dog
my
barking?
dog scratching at the door. It's time to go.
Ah, I see.
Gotcha. Danny, any last rounds or saved alibis?
Absolutely not, folks. We'll talk to you next week on Your Money.
Danny, let that dog in.